Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Let's run through the buckets here. There is still a ton going on globally. Some progress overnight. So on the geopolitical side, Vice President J.D. Vance leading the way. Steve W. and Jared on the ground moving forward. We've written to our clients, the important thing here is to make progress. It's not going to be perfect. There's not going to be a perfect outcome in the end, but we need to make progress. And short term we have. Oil prices certainly reflecting that back into the 70s, well off the highs. We have been steadfast with our clients that oil is not going higher. If anything, it has the potential to go lower. Are we going to get back to where we were pre-Iranian situation here? Likely not, but stranger things have happened. But right now, oil is well behaved, which we think is a good thing. Fed pricing tightening. We don't see it. We don't see the scenario that rates need to go higher here on a formal basis. If you look at Treasury rates in general, yeah, we've repriced. If you look at the yield curve in general, the repricing has been more so on the short end. So, we've had a dramatic flattening, but a 450 10-year note is not inappropriate for issuers or investors. If you look at the short end, I guess depending on what your view is in terms of the economy and what the Fed has the ability to do and not do, it would seem to us that the opportunity now is going to be on the short end, not on the longer end of the curve. On the economy this week, we get PCE. It's running, a little above 3%. I mean, it's tough really for the Fed to do anything here. We do think they will be patient, but patient to a certain extent. So we'll have to see. But we do believe that the inflationary numbers over the coming months, although short-term elevated, will begin to come down again. It doesn't mean the Fed will have the ability to ease, but this is now not a story of the Fed easing. It's a story of the Fed not tightening in the end. Overall, yield levels, for us, issuers and investors have become more accustomed to a normalized rate structure. If you look at, like we said, 10-year space in and around 450, there's nothing really inappropriate there. We could be 20 basis points either side of these levels, but we still do favor a lower rate story, although things are choppy. But if inflation short term is going to run elevated and at the same time, the growth numbers are still reasonable, it's hard to have a big duration call here. So, clip some coupons. We think the economy is still in good shape. We think the summer is going to be very active in terms of economic activity, and we remain optimistic going forward. Wishing everyone a great week ahead. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.